Imagine for a second
Yeah.
that you are a plumber
Right.
or maybe an electrician. You've been running your own business for, say, 20 years. You fix leaks, install boilers, you work with your hands.
Be good at what you do.
Exactly. And for 2 decades, the deal with the government has been pretty simple, right? Once a year, you sit down with a shoebox of receipts, you sweat a little bit, maybe curse at a calculator, and you file your tax return.
One single return.
One return. Done until next year.
Yeah, that sounds like the standard social contract most self-employed people in the UK have just grown used to.
Right. But now, imagine opening a letter, or rather, not getting a letter, which is actually part of the problem, and finding out that the rules of the game have completely changed.
Radically changed.
Starting in about 5 weeks from this reporting, you don't have to file one return. You might have to file 19.
Yeah.
19 separate submissions to the government every single year. And if you mess up, fines. If you're late, points on your license, essentially.
It really sounds like a bureaucratic fever dream, doesn't it?
It does.
But according to the stack of reports we are looking at today, this is the very real, very immediate reality of HMRC's expansion of making tax digital.
So welcome back to our deep dive into the source material. Today we're unpacking a story that feels small on the surface, like it's just paperwork, right?
Yeah, just admin.
But it is actually huge in its implications. We are looking at some furious economic data, reports on government accounting that will honestly make your jaw drop, and articles from the Times that suggest a fundamental shift in the relationship between the state and the earner.
And the phrase the sources keep coming back to is asymmetric warfare.
Asymmetric warfare. That sounds a bit intense for a tax policy.
It is intense, but the vibe I'm getting from these sources is that the state is using technology to apply maximum pressure on the little guy.
Right.
The self-employed, the tradespeople, demanding this hyper-accuracy and constant reporting. Meanwhile, as we'll see later, the giants in the government itself are playing by a completely different set of rules.
So let's get into the weeds. Making tax digital, or MTD. I mean, it sounds efficient. Who doesn't want things to be digital in 2026?
Sure.
But the source material suggests this isn't just about scanning receipts. What is actually changing this April?
So MTD is effectively the government's attempt to modernize the tax system by forcing digital record keeping.
Okay.
The headline change is for the self-employed and landlords with a turnover above a certain threshold. It's currently set at £50,000, but dropping to $30,000 shortly after.
Wow, 30,000.
Yeah. The days of the annual self-assessment are ending for them.
Okay, but wait, 19 returns. How does a plumber or an electrician go from 1 to 19? Is that hyperbole? Because that sounds like a full-time job.
It's not hyperbole at all, unfortunately. It's the extreme end of the new reality, but it is a very possible reality for a lot of couples. So let's break down the math provided in our source material.
Let's do it.
The new scheme mandates that if you are self-employed within these brackets, you can't just do an annual check-in anymore. You have to file quarterly updates,
Okay, that's 4 times a year right there.
plus an end-of-period statement.
Okay, so that's 5 right there. 4 quarters plus the final one.
Exactly. For most affected individuals, 5 is the new minimum.
Still a big jump from 1.
Huge jump. But the source highlights a specific case, a husband and wife team. Let's say they are plumbers working in a business partnership.
Okay, a standard family trade business. Very common.
Right. Under the new rules, the husband has to file his own individual quarterly updates and final statement. That's 5.
Right?
The wife has to file her own individual quarterly updates and final statement. That's another 5. We're at 10 filings.
10 filings just to exist as individuals.
But because they are a partnership, the partnership entity itself has to file quarterly updates and a final statement. That's another 5.
Oh my goodness. We're at 15.
And if they are VAT-registered value-added tax, the consumption tax in the UK, that is another 4 separate returns a year.
Wow.
That brings the grand total to 19 separate submissions to HMRC every single year.
19. That's almost 1 every 2 weeks. You're basically spending your life doing admin.
The estimate from the source is that this will suck up about 30 hours a year just on pure administration.
30 hours.
And remember, these aren't accountants. These are people trying to fix your sink or wire your house. They earn money when they are on site, not when they are wrestling with spreadsheets.
Well, speaking of spreadsheets, there's another catch here that really stood out to me in the reading. The source emphasizes that you can't just log into a free government website and type these numbers in anymore, right?
This is a crucial insight here. It's the privatization of the tax interface. The mandate requires you to use MTD-compatible commercial software.
Meaning you have to buy it?
Exactly. You have to go out and subscribe to a third-party platform.
Like Xero or QuickBooks.
Yeah, or similar services that are compatible with HMRC's system. So not only is it a time tax, it's a literal financial tax on top of your actual tax.
That is wild.
You are paying a private company for the privilege of telling the government how much you owe them.
That seems like a massive barrier to entry, especially when you consider the demographic here.
Yeah.
The source points out that a lot of self-employed tradespeople are older.
Right, the silver tech gap. You have people in their late 50s or 60s. They've done paper or simple digital filing for decades.
Yeah.
Now they are being told, learn this complex cloud-based accounting software or else.
And the tragic part is the source mentions that many of these older workers are saying, you know what, I'm done.
Precisely. They would rather retire early than learn how to file a tax return every few weeks, which just exacerbates the shortage of skilled tradespeople we already have.
Right, it's a classic unintended consequence.
Exactly.
But let's talk about the or else part, because usually with big changes like this, there's a grace period. Right. A getting to know you phase.
Not really, and that's where we get to the stick. The new system introduces a points-based penalty regime. It's essentially the gamification of punishment.
Gamification usually implies something fun. This sounds like the complete opposite.
It is. The mechanism is simple. If you miss a deadline, and remember, you have 19 of them potentially, or make a submission error, you accrue penalty points.
Right.
Once you hit a certain threshold, specifically 4 points, you get hit with a £200 fine.
£200. And I assume those points don't just vanish overnight.
No, they stick. And the source argues this is designed to be automated. It's not a human looking at your file saying, oh, Dave had a bad week, let it slide.
Right.
It's an algorithm triggering a fine.
What worries me is the rollout. Usually with a change this seismic, you'd expect billboards, TV ads, radio spots.
That's the scary part. The report from the Times referenced in our source notes a distinct lack of advertising. At the time of the report, people had about 5 weeks to prepare before the April deadline.
So you got people walking blindly into this minefield.
Exactly. Millions of people are going to wake up to fines they didn't know were coming. It creates a trap dynamic.
But why? I mean, usually there's a justification. What is the official story for why we need to make a plumber file 19 times a year?
Well, the government claims this is necessary to close the tax gap.
The tax gap.
Yeah. They say there is a £47 billion black hole of unpaid tax, and that by forcing these digital updates, they will catch errors and hold small businesses to account.
Hold them to account. That phrase again.
Right. And they also use the word equitable. They claim bringing lower-income individuals into this digital net makes the system more equitable.
I have to stop you there. How on earth is it equitable to force a low-income, self-employed person to buy expensive software and do 30 hours of unpaid admin? That feels like the definition of inequitable.
It raises a massive question about who the system is actually designed for. But this is where the deep dive gets really juicy.
Okay.
Because if the argument is we need to close the black hole and we need absolute accuracy, you would assume the government's own house is spotless.
Oh, I have a feeling I know where this is going. If they are chasing us for every penny to close a black hole, surely their own books are balanced down to the last penny, right?
You would think so, but the source material provides a reality check that is, frankly, shocking.
Lay it on me.
Let's start with HMRC themselves, the tax collector. The source states that HMRC has not balanced its own books for 14 consecutive years.
14 years, so since before the iPhone 5 came out.
Consecutive. They have material levels of fraud and error in their own accounts. Specifically, the source cites £4.6 billion in fraud and error within HMRC's own systems, particularly around tax credits.
Wait, so the people fining you £200 for a paperwork error have lost $4.6 billion?
It gets worse. Let's look at the DWP, the Department for Work and Pensions.
Okay.
They haven't balanced their accounts for 37 years.
37 years, that's longer than I've been paying taxes. That is nearly my entire life.
And the amount unaccounted for there is £9.3 billion.
Incredible.
Then you have the Cabinet Office, the heart of government. They failed to balance their books for the second year running with $7 billion unaccounted for.
That is mind-blowing. We are talking about tens of billions of pounds just missing or unaccounted for.
Unaccounted for due to fraud and error. The source describes this as the ultimate hypocrisy of the bureaucratic state.
Absolutely.
They are demanding a level of accuracy from a self-employed electrician down to the individual receipt that they have failed to achieve themselves for nearly 4 decades.
It really paints a picture of that asymmetric warfare you mentioned earlier. The state is this hulking, messy giant that can lose billions without consequence. But if the little guy misses a receipt, the hammer comes down.
And that asymmetry isn't just between the government and the individual, it's also between the individual and the corporation.
Right, because I assume Shell and Amazon aren't filing 19 returns a year.
Not even close. The source highlights a stark contrast. Major corporations, and the source specifically names Shell, HSBC, and AstraZeneca, only have to file 1 single tax return per year.
One.
The giants of industry, with armies of accountants, do 1 filing. The plumber does 19.
That when you put it like that, it feels entirely broken. It signals that the system is designed to facilitate the big players while micromanaging the small ones.
Precisely. And there are some bizarre exemptions, too. For example, currently, limited companies are exempt from this specific MTD expansion.
Really?
Yes. So, paradoxically, the government might be forcing people to incorporate just to avoid the paperwork, which actually adds more bureaucracy in the long run.
Right. Creating more red tape to avoid the other red tape. That makes total sense.
But the really strange exemption mentioned in the source is for people without a national insurance number.
Wait, who doesn't have a national insurance number?
That's the exact question the host in our source material asks. If you are a British citizen working here, you have one. It's your ID for the tax system.
Right.
So effectively, this squeeze is targeting those who are most in the system, while potentially letting those operating outside the standard structures, maybe people working entirely in the black market or undocumented workers, off the hook completely because they can't even register for the software.
It's like being punished for being visible.
That's the trap.
Yeah.
You are penalized for being a compliant, registered citizen.
I want to zoom out a bit because the source material didn't just stop at taxes. It paints a picture of this bureaucratic squeeze happening against the backdrop of an economy that is, quite frankly, shrinking for the individual.
Yeah.
It feels like the walls are closing in from both sides.
That is the context we can't ignore. If the economy were booming, maybe 30 hours of admin would be annoying but manageable. But the economy isn't booming. The source specifically dives into the job market data for the class of 2026.
The future workforce, what are they seeing?
It's bleak. We're looking at data that shows graduate jobs have fallen by 25%. That is the worst market drop in 13 years.
A 25% drop, so a quarter of the entry-level jobs just evaporated.
And the competition for the remaining spots is ferocious. The source gave a specific example that really stuck with me. There was a case of 72,000 applications for a set of roles.
Probably 2,000.
Out of those 72,000, only 754 were recommended for appointment.
That's basically a lottery at that point. That's a 1% chance.
It's worse than a lottery because you spent 3 years and thousands of pounds getting a degree just to buy the ticket. And the real problem is stagnation. You have the class of 2023 and 2024 who haven't found jobs yet.
Right, they're still looking.
They are now competing with the class of 2025 and 2026. It's a massive bottleneck.
And at the other end, you have older workers who can't afford to retire, right?
Exactly. High cost of living, high energy prices. So they hold on to the seats, and the source mentioned businesses are cutting back investment too. The data shows 40% of businesses are cutting investments specifically due to energy prices.
Wow.
We even saw a major UK lender who has been in business since 2006 plunge into administration. So the engine of the economy is sputtering.
And then there is the AI shadow looming over all of this.
That's the other layer. The source argues that universities are failing to prepare students for the AI reality. They are selling courses for jobs that might not even exist in 5 to 7 years.
So you have this perfect storm.
Yeah.
A shrinking job market, an education system lagging behind technology, and a government increasing the administrative burden on the only people trying to start their own businesses.
That sums it up perfectly.
So surely the government sees this. What is their solution? If the boat is taking on water, are they bailing it out?
Well, according to the source material, the government is to, quote, directly clueless.
Ouch.
Clueless. The critique here is that the government's response to the deficit and the economic squeeze is a faster integration of net zero.
Net zero. How does that fix a deficit or help a graduate find a job?
The argument from the source is that it doesn't. In fact, they argue it's driving up energy costs, which kills investment. Remember that 40% stat we just mentioned?
Right, it's a feedback loop.
And then there's the migration angle. The government narrative has often been that migration compensates for labor shortages. But the source points out a brain drain. We are losing skilled workers, doctors, nurses who are fleeing to places like Australia for better pay and less bureaucracy.
So we're trading skilled professionals leaving for what exactly?
For a system that assumes mass migration can plug the gaps without considering the GDP per capita reality, the source argues that simply adding people doesn't grow the economy if you don't have the productivity to match.
It feels like the verdict here is that the solution, more regulation, high energy targets, is actually the fuel for the fire.
That's exactly it. The source suggests the only real fix is cutting red tape and lowering taxes to stimulate growth. But MTD, making tax digital, is the exact opposite of cutting red tape. It is the weaponization of red tape. It represents more state management of the individual.
It's a heavy picture. You've got the small business owner facing 19 tax returns and fines. You've got the government losing billions in its own accounts while chasing you for pennies. And you've got a job market for the next generation that is crumbling under the weight of costs and lack of investment.
It is a perfect storm, and it really forces you to look at the concept of accountability.
That seems to be the word of the day.
It is. The government is using technology to hold you to account, to track every transaction every quarter with the threat of automated fines. They are building a digital panopticon to ensure you don't miss a receipt.
But the mirror isn't turning the other way.
No. And that is the provocative thought the source leaves us with. It's the question that lingers after you put the report down.
Go on.
If making tax digital is about holding the citizen to account for every penny, who exactly is holding the government to account for 37 years of unbalanced books? Who fines the Department of Work and Pensions £200 when they lose $9 billion?
That is the question. Apparently no one.
It seems the penalties only flow downhill.
Well, on that sobering note, seriously though, this is stuff we need to know. The landscape is changing, and ignorance is definitely not bliss when there are algorithms triggering automated fines.
Absolutely. Stay vigilant. Check your requirements. If you are self-employed, do not wait for the letter. Go look up the MTD requirements now.
And maybe check in on your plumber. They're going to be having a really rough year. Thanks for listening to this deep dive into the source material. We will catch you next time.